Hey guys, Mike here. So obviously Jerome Powell speaks today. They raised the Fed's fund rate 50 basis points, so now it's between 75 and 1%. They're going to start rolling off the balance sheet starting in June, and they laid out the levels for that, which were actually less than what people thought, and they put a cap on it for 3 months for some of these things, and so that is a good thing. And so I'm actually going to show you, one, if you've never seen a 1-minute chart sped up, and you get to see bulls and bears fight and traders actually killing it, making money going both ways. I'm going to show you that. I'm also going to show you the exact moment the market turned with the comment he made, and this just sent the market almost like parabolic. I mean, the QQQ was almost at one point, almost up 4%. It was crazy. I mean, it just ripped, right? And so everything pretty much went up that was red. It was crazy. And then I'll take you through the things you need to know are here, and so we can finally put this to bed about fighting the Fed. About the Fed there's no way they're going to raise interest rates at all. They're just going to completely do a 180 this month or whatever people have been talking about. He lays it out plain and simple, guys, and you're going to see exactly why the market responded like it did. Okay, so hit the like, subscribe button if you get anything out of this, and let me show you that chart of bulls and bears and traders and what's making this market so freaking volatile. So this is right when the release happens. Jerome Powell speaks about 30 minutes from now. And so watch how this goes here. Watch the 324 level, the 320, 317. They've already beat us down from the 324 level as the release came out, right? Showing what's going on. Boom, bust right through the 320 level. But look what happens when we start to approach the 317/0 Fibonacci level right there. You can see the bulls are like, no, we're going to take back control. Not going to happen. The bears say, nope, we're just going to go ahead and push you on down, take control. Here they go. And so you can see it's a tug of war. And it's pretty fun to watch this if you've never seen anything like it before. Obviously, this is a lot faster when I speed it up than when it's happening in real life, let me tell you. But you can see the bears are trying to push it down. They want to get it down to a key level, which is at 317 level. And that's what they're doing right here. And you'll see, as soon as we start to cross that 0 Fibonacci level, go down to 317, what happens? The traders flip, and now you see it's got rejected, bounced right off of it. So what are they going to do? They're going to switch over. So now here comes the bulls, excuse me, and now here come the traders. They're making money both ways, right? And so they're going to try to push this back up to 320 as we await for Jerome Powell to step up, which is about to in a minute. Now we go past 320. Boom, what happens? We're going to try to push it back down. Jerome's about to come on stage right here. And so now it's this tug of war, and boom, look what happens. Really fast. They put it almost down to 317. It hits the 0 Fib level. Bam, right back down to 317 we go. And what happens? Here we go. Uh-oh, now we got it. We push them past 317. It ain't going to matter because watch. Here comes Jerome on stage. Jerome's is speaking. And they like what they hit. Jerome has a silver tongue, of course. So then watch, they keep it around the 0 Fibonacci level, 0 Fibonacci level. Here we go. No, you can't have it. I'm going to take it. No, it's yours. No, it's mine. And we all know what's coming. I mean, I was just sitting there the whole time going, I know what's coming. Boom, here we go. Let's push it back up to that 320 level. And so I'm watching the chart as it's being recorded. I'm watching him. And here is the magic moment that sent the market sky high.
Sure. So 75 basis point in an increase is not something the committee is actively considering.
And as you can see right here, green bars galore start to take off. The bears are like, uh-oh, let's go ahead and switch, start making some money with these guys. And so everybody starts piling in. You can see the bears are trying to fight it a little bit, but once you start breaking above those key levels, especially 324, you can see right here is a big battle at 324 to try to hold the line. It keeps going on and on and on for quite a while, actually. But as you can see, and this is key right here, that gray level, that's the 20% sell-off level for the QQQ or the NASDAQ, right? And you can see, as soon as you hit these kind of levels, you see this back and forth, but as soon as it breaks above this right here, you can see that the bear's like, no, I'm gonna push you back. But it didn't matter, because once that key level was broken, we went below or up above the 20% sell-off level and got to around 19.5, whatever, the market just took off. I don't know if you got to see that or not, but that's what happened. And there's a couple things that happened today. One was certainty in the market was put in perspective, okay? We entered the day, what I do a video on Monday, and I don't know if this is going to hold or not, but what was happening? I showed you these 4 different indicators I was looking at and how bearish they were, and all this stuff. And I said, man, this is really technically set up for a nice bounce. Who knows how long that'll hold? Might be over with by tomorrow. But if he comes out and he gives certainty, which is what he did right there and also right here.
What we are doing is we raised 50 basis points today, And we've said that, again, assuming that economic and financial conditions evolve in ways that are consistent with our expectations, there's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings.
And what has the market been pricing in? What have you heard? 3 to 4 50 basis point hikes, okay? Before as the sell-off happened, that's what they were trying to do, is push the multiple down, push the prices down, push those FANG stocks down to try to incorporate that. And on top of it, they laid out exactly what they're going to do on the balance sheet, which is actually, I think it was less than what people were thinking was going to happen. But now it gives them 3 months. They say these caps are locked in for 3 months. And on the mortgage-backed securities, they don't think they're going to go as high as the cap is. Okay, and then in 3 months, they'll raise. What does that tell institutions? Again, we don't know if this is going to work, but it tells them, hey, this is our last chance to make some money, right? That's what, when I look at it, that's what I'm seeing, okay? When I'm seeing these earnings calls and everything else, which I'll show you in a video tonight on that as well, that's what I'm seeing. And so then, of course, he's asked multiple questions, and he's trying to lay the plan out as simple as possible.
No, 1 month's reading doesn't tell us much. We'd want to see evidence that inflation is moving in a direction that gives us more comfort.
And so they want to see the data multiple months before they actually can know, is inflation actually going down, or supply chains problems actually letting up? And then, here's a couple more. One, this is something, it sounds counterintuitive, but this is something companies love to actually hear from him about wages.
We can't run that risk. We can't allow a wage price spiral to happen, and we can't allow inflation expectations to become unanchored. It's just something that we can't allow to happen, and so we'll look at it that way.
And why? What are you hearing on the earning calls? The cost of labor, right? That's a big one for them. It's not just the materials and stuff people need. And I'll be honest with you, I actually think wages, they already kind of got it under control, because look in your area. I know I drive by some restaurants every day, and they used to have these big signs that they're looking for help. And last year they were offering like $14 come flip a burger. Then the sign went down to 12. Now it's down to like 11, right? So they're not offering as much, because now they actually got help in there, and they can get people for cheaper now. So that's kind of what they're doing. But he can't, and so companies love to hear that. They're like, oh great, we don't want to keep raising the cost of our salaries and our hourly employees. That'd be great, right? Because they get to keep more money of it, and it helps out the stock in the long run. So they enjoy hearing that, right? And so the other thing he goes on to talk about,
our tools don't really work on supply shocks. Our tools work on demand. And to the extent we can't affect really oil prices or other commodity prices or food prices and things like that. So we can't affect those. But there's a job to do on demand. And that you can see that in the labor market, where demand is substantially in excess of supply of workers. And you can see it in the product markets as well. It's our job to make sure that inflation of that unpleasant high nature doesn't get entrenched in the economy. That's what we're here for. One of the main things we're here for. Perhaps the most fundamental thing we're here for. And the way we do that is we try to get supply and demand back in sync with each other, back in balance, so that the economy is under less stress and inflation will go down. Now, the process of getting there involves higher rates. So higher mortgage rates, higher borrowing rates, and things like that. So it's not going to be pleasant either. But in the end, everyone is better off. Everyone, particularly people on fixed incomes and at the lower part of the income distribution, are better off with stable prices.
And so what I'm hoping happens from here on out is, they've laid the plan out. They're telling you they just can't allow inflation to stay between 5 and 8% for long periods of time. Okay, it would just destroy the middle class and lower income. It cannot happen for long periods of time. That's what you're saying. Most people haven't even lived through inflation. I know I've never seen inflation like this before in my lifetime, but I do a budget every month for our family, and we see it. We see the increases in groceries and gas and all that stuff. And every dollar going towards that is a dollar that's not going towards savings and retirement, or maybe a vacation, or whatever it is, right? And so that right there is key, okay? And so hopefully we kind of put all this, fight the Fed. The Fed's not going to keep raising interest rates because of this, that, and the other. They could change, but he's pretty much laid out the next 3 months for you, right? Should be 50 basis, unless something crazy happens with these reports coming out, should be 50 basis point hikes, June, July, okay? Maybe August, who knows, whatever their months are, they're scheduled. And then obviously rolling off the balance sheet, all right? And so, understand that's where we're at. hopefully you got something out of that. I kind of like this format. It goes quick and hurry. So let me know in the comments if you did. And that's how I'll try to keep it up for you guys. But those are the most things you really need to understand about the Fed and the market. And this could be a catalyst, a springboard us to another rally. Who knows how long that's going to last? You just don't know in this market. So we'll see. But understand, rates are going up, balance sheets rolling off. That means liquidity is coming out of the market. That's what you need to know on a big scale, okay? And so it will affect us down the road at some point in time for sure when the market wants to basically tap out for a while and go on a huge sell-off for sure. But we'll see. That's kind of how it always happens. And so anyway, let me know if you got anything out of this in the comments. Hit the like, subscribe button for me, and I'll see you guys later.